Hey, welcome back everyone. I am making a follow-up video on an asset we have done in the past. I hope this video is very helpful to everyone around the world because this is a global asset. Today we are going to go over gold. XAU is the ticker symbol if you are looking for it on whatever trading platform you're using. You can use all these other tickers, but I'm going to use XAU because it's denominated in US dollar spot. And what I'm showing you right here now is on the monthly chart, and obviously everyone is excited about gold as a hedge and blah 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 blah. Why am I telling you, hey, be very careful that, hey, a local top can be setting in? All the people trying to buy gold right now are probably going to be very disappointed for the next few months, if not a year, if they are buying at these levels. And I'm going to state my case moving forward. Yesterday, if you saw yesterday's video and we looked at the volume, we didn't have any kind of like clues as to what's going on in the volume. Today on XAU on the monthly, you can see as we're getting to the highs, volume is starting to subside, and we have 18 more days for this monthly candle to close. So in 18 days, if this is where the volume stays, then a local top can be put in and we can see the next few months setting to the downside as inflation worries subside, as federal rate gets cut. FOMC meeting is next week, Wednesday, 2 p.m. This can go up all the way until Wednesday at 2 p.m. and then you can see whatever reaction you need to see accordingly as to what the policy the FOMC decides to display at 2 p.m. So that's why I'm making this video now. You can watch this video, laugh at me all week, and the next week see if everything plays out accordingly. If you have a bunch of gold and silver, if you want to take any action, now would be the time to take it. You got a whole week to run to your nearest jeweler to do what you got to do with your spot. So moving forward, before I start showing you all the good stuff, if you haven't already, please subscribe. Please hit the subscribe button. Please hit the thumbs up button. Hit the bell notification so you get the updates as they come. If you are interested in trading with me live, please feel free to join the Discord server. Link to the server is in the description of this video below, alongside all the other affiliate services that I use and recommend that helps the channel grow. So thank you guys so much. If you go to our YouTube channel and you type in gold or XAU, you'll find the old videos. The old videos will show the doodles that I'm about to show you right now, minus this large fib on the left, okay? This large fib I just made because of the head and shoulder being proven. We had this all in the last video, okay? Everything in this chart was there in the last video, aside from this major fib on this large side. All this stuff was there. And what I want to point out now is we were looking for a breakdown over here at 29.35, and what did we do? As people were looking for that slowdown, what happened was we did a short squeeze. So whoever shorted gold, whoever thought we were going to go down like me, you know, a lot of traders were looking for that measured move to test the support and then look for that break up anyway. We were all looking for higher, but we're looking for a consolidation first. Now, since that got negated, all of this, I'm moving up now. Okay, so this is the new top. Okay, there it is, and we're doing this on a monthly so that we can follow up on a lower time frame, and you'll laugh at how these doodles will match up exactly with the same stuff. What happened was we basically did a short squeeze, and we're trying to see now, okay, are people buying at the top here, or are we going to get that last push into 37.85, which is very possible. We can get the FOMC news, we can come over here and then pull back, but we have to be prepared that, hey, this doji that we have last month, we can be testing into the doji in 3 lower high sequences. So if we don't take out the liquidity above 34.36, this is a lower high, and we've already got a wick over here. So I'll show you on lower time frame if that reversal is setting in for that downward push. Okay, so this was negated. Hold on. And we'll go over all that very shortly. I can't make this video long today because I do have to run to work. But before I run to that, I'm going to give you the heads up. Okay, this little doodle, we're moving it to right. We're moving that right to there. That's where we want to see the shorting opportunity, because that's a retest of the rejection. If the buyers are weak here and the sellers are strong, obviously this is where we're going to roll over, right? And that's what we want to see. Where is this buy up probably going to happen? All the way down here, probably. I'm leaving the channel, this descending channel here, but technically this descending channel also needs to be moved up, but I'm going to leave that one there. Let's turn this one white. Okay, and then let's make this one for a bullish pullback. So if we're bullish, we don't want to basically break this descending channel, which is buying opportunity. Okay, that's how we want to play that out. Now, if we do break down, then obviously you understand why we have this lower. We have that, and then we can meet over here somewhere and see if that's where the inverse head and shoulder completes around 225.54. Obviously, everyone's gonna be like, "Oh, you're crazy. These numbers are like out of pocket." Blah 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 blah. All right, we'll see in time. Okay, we'll see in a little bit of time because gold has been on an uptrend, and this is a global uptrend, right? So who's gonna sell when it's at these highs? It's gonna be central banks and shit. It's not gonna be you and your mom and pop. You guys are broke and poor. It's gonna be billionaires and trillionaires who took the hedge in gold over dollar that are gonna take out their hedge as they whatever they need to do to rebalance their portfolio. It has nothing to do with us. What are they doing as their reserve currency? What are they holding as a reserve currency? Is it dollar? Is it gold? Is it Chinese? Or is it bonds? Whatever it is, that's what this is. A lot of people chose gold, okay? So that's why this is happening. Let's go now real quickly to a weekly time frame. Okay, so here is a weekly time frame. Here is where we are looking for this rejection, right? This is what we just depicted on the monthly. That's where we want our rejection. We're looking for this little swoop over here to show us that that's where we're going to fall apart. Now, how do I say this? We have 1 day, 9 hours left, okay? The week is going to be putting in a lower high in the weekly so far. If we can make a higher close on the weekly, then we can look for upside continuation next week. If we make a lower high here, then that is going to be the warning that next week, regardless of whatever the Fed decides, the descending, the downside is already basically started. Weekly close below 3,400 means lower high, third, and downtrend pivot more likely. Wednesday, FOMC will decide. Okay, so that's basically for us to follow up later. And yeah, that's basically the main thing I wanted to say about gold. Say the gold does reject over here at the 3,400 we said. Oops. Come on. Third. Okay, so that way you could see it better. Okay, well, I don't know where that line went, but it's there, okay? 3,400, all right. And if we do get that pullback, what's gonna happen? Well, we're looking for the support, just as this doodle depicted. Okay, we're looking for support over here at around 31.50, and then possibly lower all the way down to 28. What we need to do is wait and see basically how price action behaves to the rate cut, and we'll know accordingly. Regardless, if we do come into this territory, this is a major warning, major take profit area. You need to be completely ready for a swing failure pattern. Beware SFP major rejection. So if someone does let it come to this level and we get a hard sell order in this level, that's just going to be that much more confirmation that yes, we are going to come on down. We're basically trying to take liquidity, right? So how do you do it? You form a head and shoulder. And then once you get that hard rejection, that's going to be your right shoulder. And then you do that downward path, come into the level of support, look for liquidity and reverse. And the level of support I'm looking for is right here around 29.35. And the next level of support is right over here, 25.54. There is no if, ands, or buts. Okay, the levels are the levels. Everything in the middle, I don't care. Like all this BS, I don't care about the middle. All I care about are the major levels, the institutional levels. Aside from those levels, everything else is just air. And I just want to stress that. Like, if you want to be a proper trader and you want to be mechanical about it, just use the levels and ignore everything else. All this air and gap is just basically for you to measure consolidation, but it's not to dictate that, hey, this has to follow this path. You can see the reason why I'm saying hard rejection is because this has been a parabolic rise, right? So what happens in a parabolic rise? When you have a blow off top, you know, a major SFP, the beware major SFP, okay, wait, beware SFP, major blow off top rejection. 40 to 80% retrace. Okay, that's what no one will tell you. So the rejection is one thing. There you go. The reason why this matters is because when we did this expansion, we came to overbought now, okay? It's very easy for big players to sell in this overbought condition easily. And you can see the volume is nice, but it's starting to taper off. When it tapers off, you can get what's called a blow-off top, which is like this, a major sell-off into support, okay, which are these EMA bands. Well, look how far you are away from your EMA bands. So if the sell-off does begin from this level that we're at, to go to the band, it's already a 20% drop. The deepest band is about 40%. And that's what I mean. Beware major blow-off, top rejection, 40 to 80% retrace. You're going to have this big, deep dive and then the upside push in a bull flag consolidation pattern. So it's like this, then you go like this to destroy everyone, and then you go back up in a bull flag consolidation pattern. That's what I'm looking for over here. I don't buy over here. I don't buy over here. No, I want to buy at the support. That way my DCA is, sorry. So my DCA is in an inverse head and shoulder fashion. That way I get the best opportunity to buy the lows before that reversal comes. So the whole point is timing everything properly in the wedge. Hence why I gave you these levels, 29.35, 25.54. That's how deep, and this was 40%. Oh no, this was like 20, 30%. This is like 40%. These lines will slowly creep up every month that we close. And this yellow line right here at around 24.50 is a major level of support. So I really doubt that we're going to go lower than that. I really am not holding my breath for 25.54, but 29.35, yes. Yes, I do think so. 3,200, freaking heck yes. Okay. If 3,200 does not get lost on a monthly close, and we keep opening and closing the monthly above 3,200, then we need to stop looking for downside, and we need to look for the rejection at 3,800, because of the fact that the market is not gonna just make it easy. So they need to find a little bit of weakness or bearish divergence. The bearish divergence is just starting, but you still need 18 more days for the monthly to close. This month will just close like this. It will start the bearish divergence. Next month, you might get a nice big red candle. That's when you can confirm bearish divergence and the downside pivot. So that's what I wanted to get you guys informed about. I hope that all helps. I'm going to delete all this nonsense. Or should we leave all this? Nah, we should delete all this nonsense. So I'm going to delete all this nonsense while I go over my closing stuff. If you guys have any questions or concerns, leave it in the comments section below. If you're interested in trading with me live, feel free to join the Discord server. The link to the server is in the description of this video below, alongside all the other affiliate services that I use and recommend that helps this channel grow. So guys, thank you guys so much for your support. I greatly appreciate it. Jamin, I'm always going to shout you out, bro. Thank you guys so much. Other than that, guys, I hope you have a great day, and I'll see you guys in the next one. I hope this helped you out because gold is, extremely important. And aside from gold, the whole world is looking at this piece of crap, the dollar index, and we are literally destroying my heart because I wasn't expecting it to literally lose the $100 for the last couple years. I'm like, oh yeah, we're not going, we're under it. Now we are actually at a doji, and we are actually engulfing the doji to the downside. We have about 18 more days left. If the government does not cut rates, this is just making the dollar too strong. They're gonna cut rates just to devalue the dollar so that way the market can function. So this big rounding bottom that we already saw before, they're starting to do that here. It's not this. This was not the rounding bottom. That was a premature rounding. It's gonna be way ugly, round, and defined. And we already have the white doodle to look for the bottom on the bottom of the channel that we are making. See, this is kind of like a bear flag. Yes, it's an uptrend, but this is a bear flag uptrend, and that's why this breaking down into 92 to 76 is possible if the Fed doesn't cut interest rates. And there are rumors that the Fed are going to hold interest rates because there's not bad inflation, and they want to hold it until December. And if they do that, they're doing it on purpose to grind out the freaking market, because they know that when the market is in blood, suffering, they're going to do it anyway. And the only one that's going to benefit in that kind of scenario are the people in cash that are fully aware of what is actually occurring. Okay, like Buffett is in cash and patient. This took very long time for this to happen. It's going to take time. And as Buffett's in cash and this is going down, his cash is actually gaining value against the dollar index. So he can convert his cash into whatever currency he wants, aka Bitcoin, gold, whatever the heck he wants. Probably going to be Chinese dollar or Chinese bonds over the US bonds. And then he'll be fine. So it's like, cash is king, guys. Cash is king because cash gives you flexibility. If you're in gold and you're stuck on the top, what are you going to do? Okay? So just be aware of gold. I should have done silver as a comparison, but silver also was at $40 when I told you guys to buy it at 20, 18, I think. So it's time to take profits. I think you should take your profits into dollar, and then dollar is gonna give you an opportunity to put it into other stuff later. I myself am fully invested in companies that are buying crypto, and I am invested in I basically bought options. So I'm going to play the long game just in case they do destroy the dollar for a little bit longer. I'm waiting to see my options expire in December. So that's how I'm trying to survive. And I'm not going to try to day trade until I get clarity out of the Fed, because it's a trap, in my opinion, to take any kind of large trades before the FOMC announces, because all the companies around the goddamn world are going to have to recalibrate as soon as they get that decision. So please be aware of what's going on. Do not become a sucker for the news. 95% of all traders lose 90% of their money in the first 90 days because they don't know what the hell they're doing, or they're impatient or whatever. They're just dreaming of fast money. That's not how the world works. That's not how trading works. If you don't know what you're doing, go hire an investor or a portfolio manager and let them do it for you. Do not stress yourself out by putting in your hard-earned money into the market thinking you're going to get a return, and you're impatient enough to wait the 5-10 years, and you sell at a loss, and then now you're just working to give the money back to the market. And that's why the market is a meat grinder. Only the people who know what they're doing are here long term. Everyone else is just grind it out, go, they come back. It's like a casino for people. Okay, it's a casino because you can trade on your phone now. So they don't even realize the money they're spending. They're just clicking buttons, and it's like gamification of gambling, but it's actually one of the most profitable things you can do in your life if you know what you're doing properly. Okay, so learn the game, then trade. Stop gambling. Yeah. All right. That's all I got for you guys. Have a great day. Be safe. Talk to you soon. Adios.